The Stargate AI project has been all over the news today, and one company that's going to benefit is Arista Networks. And this is one of the most beautiful charts I have seen in quite some time. Yes, although price is oversold, price action can become more oversold. And if you look at this monthly chart, this is a 13 simple monthly moving average, and it has done nothing but respect this line all the way from December of 2022 to the current price of $130. Now, price is a little bit overextended. However, price can become more overextended as long as the good news keeps rolling in. Now, before we continue to look at the other time frames, stay tuned to the end. I'm going to give you some levels of interest. If price was to pull back, it would suggest you can go long. Shares of Arista Networks surged intraday Wednesday following the announcement of the Stargate AI project, which analysts at Jefferies believes will benefit other companies such as Ciena, Lumentum, and Coherent. The project, which is being led by OpenAI, SoftBank, and Oracle in collaboration with Microsoft, is valued at $500 billion and is expected to have a positive impact on Arista due to its existing relationship with Microsoft. Now, they understand that OpenAI, Microsoft, is the technology lead. That's great for Arista given their incumbency at Microsoft, the analyst George Noter stated. This endorsement highlights Arista's strong positioning to capitalize on a substantial AI initiative. Now, Arista Networks, known for its cloud networking solutions, has been a key supplier to tech giants like Microsoft, which positions the company favorably in the wake of the Stargate AI project news. The project scale and the involvement of leading tech firms suggest a significant opportunity for network infrastructure providers. Alright, so as I promised, we're going to go down to smaller time frames to look at levels of interest where one can go long if price was to pull back. This is the weekly chart. This is the monthly chart. Let's go down to the weekly chart. Now, a couple things you can see. You have this gap to begin the week. Price gap pull back to the closing price of the previous week and then move higher. However, I want to go even further down. You have this little basing candle here. And so that would be an opportunity if price was to pull back at the $100 level to potentially go long. And that level was established from this rally in price, one basing candle, and then the rally out. And as you can see from the previous subsequent week, price attempted to come back to that zone, could not quite dip its toes at the top of the zone before pushing price higher. So you know there are buyers waiting to get their unfilled orders filled, and this is also happens to be a round hole psychological number at the $100 level. Now, another level that I want to show you is going to be found on the daily chart. So let's go down to the daily chart. And what you can see on high volume, above average volume, you have this gap higher. This was all-time highs. However, it did pull back before the next impulse move higher. And so this was also $120 level. So resistance becomes support. And if I scroll up to the weekly chart, that level also coincides to what we had was all-time highs. Again, this pullback before price moves higher. However, that level is still valid. So you got two levels of interest for the aggressive traders. You can go long on a pullback to that $120 level, or the conservative investors who are waiting for a steeper pullback. Got this weekly buy level at $100. If price was to pull back this low, I would put a stop right below the low of this pivot low. That would be risking roughly $10 again, at least to make a 3-to-1 reward to risk ratio. Thanks for watching. Subscribe. Please like the video.